What happened in the markets today? 1. Markets gain on First Republic Bank aid, tech enthusiasm. U.S. equities jumped on an industry bailout of struggling First Republic Bank, FRC, and on enthusiasm for semiconductor and other tech stocks. The Dow and S&P 500 rose more than 1%, and the Nasdaq popped 2.5%. First Republic was the best performing stock in the S&P 500, bouncing back from big losses earlier in the day after several major banks pledged $30 billion to prop up the ailing financial institution. More below. Shares of Comerica, CMA, Regions Financial, RF, and other regional banks increased. However, American Depository Receipts, ADRs, of Credit Suisse Group, CS, closed flat, giving up early gains after the struggling Zurich-based bank received financial backing from Swiss officials. Semiconductor stocks helped drive the tech advance. Intel, INTC, led the Dow higher after an analyst upgraded the shares and said the sector was ready to soar. Shares of Advanced Micro Devices, AMD, Nvidia, NVDA, and others in the industry took off. Shares of Alphabet, Google, Amazon, AMZN, and Microsoft, MSFT, added 4%. Apple, Meta Platforms, Meta, and Tesla, TSLA, shares climbed. Adobe, ADB, shares were nearly 6% higher as the software maker exceeded profit and sales forecasts and raised its outlook. Icon cuts Newell Brand's stake. SolarEdge Technologies, SEDG, was the worst performing stock in the S&P 500, and shares of others in the solar sector declined. Newell Brands, NWL, shares dipped as billionaire investor Carl Icahn reduced his stake in the consumer products maker. Shares of Dollar General, DG, sank as the discount retailer missed quarterly estimates. The yield on the 10-year Treasury note reversed course during the session and gained. The same was true for oil futures. Gold prices fell. The US dollar lost ground to the euro and pound, but rose versus the yen. Major cryptocurrencies traded in the green. From the editor's desk. 2. Banks bail out struggling First Republic. A group of U.S. banks is throwing a multi-billion-dollar lifeline to struggling First Republic Bank, FRC. An announcement from Bank of America, BAC, Citigroup, JP Morgan Chase, JPM, and Wells Fargo, WFC, indicated they would deposit $5 billion each in First Republic. Goldman Sachs, GS, and Morgan Stanley, MS, would both provide $2.5 billion, while 5 regional banks would add $1 billion apiece. The total amount to be given by the 11 banks is $30 billion. The statement said the action reflects the bank's confidence in First Republic and banks of all sizes. It added that the bailout demonstrates their overall commitment to helping banks serve their customers and communities, pointing out that regional, midsize, and small banks are critical to the health and functioning of the financial system. The banks explained that despite the recent collapse of Silicon Valley Bank and Signature Bank, the banking system has strong credit, plenty of liquidity, strong capital, and strong profitability. Recent events did nothing to change this. Uninsured deposits. Concerns about the financial stability of First Republic have been raised ever since the failure of the Silicon Valley Bank and Signature Bank, leading the federal government to step in to protect depositors, including those who had deposits beyond the $250,000 threshold of FDIC insurance coverage. Silicon Valley Bank and Signature Bank were the only 2 banks with a higher rate of uninsured deposits than the 68% of First Republic, raising fears it might suffer the same fate. Earlier today, S&P Global and Fitch cut their ratings on First Republic's bond to junk, citing the bank's tenuous financial position. Shares of First Republic had fallen as much as 36% today, but then reversed course on initial word of the potential industry bailout, and ended the day up 10%. From the editor's desk. 3. Yellen says U.S. banking system is sound. U.S. Treasury Secretary Janet Yellen told a Senate Finance Committee hearing that the nation's banking system remains sound after the collapse of Silicon Valley Bank and Signature Bank. Yellen defended the decision to protect uninsured deposits, above $250,000, at the 2 banks because officials needed to prevent depositors from racing to pull their money out, noting the risks of a potentially bigger crisis. She pointed out that there can be contagions in situations like this, and other banks can become prey to the same kinds of runs. Appropriate supervision of banks. Yellen added that regulators need to look into what created the problems at Silicon Valley Bank and Signature Bank, and make sure our regulatory system and supervision is appropriately geared so that banks manage their risks to avoid problems of the type that these banks have suffered from. Market movers. 4. S&P 500 top and bottom performers.